Hello everyone, this is Evan here from the Trade Risk on Wednesday, December 21st with a midweek market recap video. We are first going to start by analyzing the current market environment. We're then going to move into some of the other major markets, sector analysis, and then finish off the video with some individual names. We're going to jump right into the action today. S&P 500 SPY ETF finished lower on the day, about 0.25%, and you can see that's the first lower close we've had this week, going back to last Friday where we had this prior down session. So let's take a look at where we came from. As I just noted, last Friday we kind of closed the weeks on the lows. This Monday we had an inside day. It was a slight pop-up, slightly green day. Tuesday followed through higher, and then today we closed lower. Not a lot of energy, very tight ranges overall, and that's sort of to be expected. We all know this is a lighter volume sort of holiday period where most people are kind of checked out of the markets and already wrapped up their books for the years. So volume tends to dry up and the moves do so as well. But with today's move, I want to at least point out a couple of different things and then just maybe a few different scenarios, both on the bullish and bearish side heading into the end of the year. So today, again, a little bit of weakness creeping in. We actually pierced and closed below yesterday's lows. Again, I know this is really tight tight ranges here, so it's tough to read too much into this, but we did close at or below yesterday's low. And I want to paint first the sort of pessimistic picture here. And well, actually, before I do, then remember the SPY ETF did go ex-dividend last Thursday, Friday. So if we went to the cash market SPX, you can see we are back up closer to the top end, closer to these prior all-time highs here than the S&P, than the SPY ETF actually looks like. So notice here, it looks like we're kind of way down here. So just keep that in mind. You're still skewed by about $1 until the charts really sort of have enough time to catch up. With that said, let's just continue with the SPY ETF because that's what we generally look at. And the first picture here I want to paint is the pessimistic one. And again, I'm not saying this has to happen. I'm just pointing this out as an option so we're all open-minded. Let's say we have this, we had this several day pull off of those all-time highs, and now let's say, okay, we have this little kind of retracement rally up. What we don't want to see, well, and I guess it depends on who you are, is this potential sort of lower high two-legged move lower. And it's a very real possibility. If we see follow through tomorrow, this could start to ignite and set up a little bit of a pullback here into the year end. And again, I know that would go against the general statistics of the year end trading, but it's something to keep in mind. And once again, this would be healthy for the longer term kind of or just even intermediate term trends to really get a better chance to reset themselves, carve out some upper level support, find new interested buyers, and then eventually lift back up and continue those trends higher. That again would be very healthy, so keep that in mind. Now if that doesn't happen, well, there's a few other scenarios. First, and probably the most likely, is we just grind it out. We grind it out in between these all-time highs and last Friday's lows. Something in this range, very low energy, back and forth, lots of overlapping. Very reasonable scenario to kind of punt it to the new year. And then of course the bullish side is where we just kind of punch through and continue racing higher. This weakness is ignored and we end up closing strong on the week and breaking above the prior highs. Those are the three scenarios, right? I mean, it always is the case, right? You can either have the bearish, the upside, or the downside. The levels are pretty clear, and I think you can just follow the action day by day. Again, it's low energy, so the path of most likelihood here is probably just a lot of sideways chop to kind of kick it to the new year. So as I've kind of put out there, we're kind of trading with a more hands-off mentality right now, not looking to get too involved. We do have a short position on. We'll cover that, the trade that we're in, a little bit later in this video, and we do have a couple of longs on, but still trying to keep things light, just get through the new year, get through this chop, and see how that all plays out. So if we go to the IWM now, same kind of similar deal here. We did have a down day today, basically back to yesterday's lows, and we're in this sideways range. We're just under all-time highs. You can see the MACD is heading lower, so momentum is kind of cooling off, but yes, we are still in an uptrend. So basically all the same comments apply here that I just kind of outlined in the S&P 500 SPY ETF. Just use different levels, and the levels are pretty clear. 135 on the downside, 138, 138.50 on the upside. The Qs a bit more encouraging here. The MACD was actually still trying to rise a bit, but it's since maybe cooled off these past 2 days or so. But you can see, it is above this prior this kind of prior breakout multi-month resistance level here around 119.50. It is holding above that, and you can see though still we got all these cluster of highs here, and it's still reluctant, doesn't have that energy yet to sort of break out above it. But I still certainly favor the Qs here out of all of the major averages right now. So that is the stance on some of the major markets there. Let's move into some other markets. TLT, let's go there next. Had an update today, up 44 basis points. You can see, the MACD, let's make this a little bit bigger here, is still kind of diverging here to the upside. So you're getting that bullish divergence. MACD is sort of rising here as, price did rise today, but structurally over the past couple of weeks here, you can see it's been in a downtrend, whereas MACD is in an uptrend. So it just tells you, again, momentum slowing. Momentum is it's slowing on the downside, and it's still, from a price behavior, still in a tough spot. Is it likely to bounce? Yes, it is trying to do so now. It's already off of these lows and trying to make a move higher. Structurally, there's a lot of damage, but very oversold on a lot of historic metrics, especially when looking at some of those longer time frames. So again, a short-term bounce, maybe up to these prior highs here of 122 or so, might be in the cards into the end of the year. We get that drift. Maybe the bulk of the selling is done, but again, you still have to remember that you're fighting a very structurally sort of damaged and strong downtrend chart. GLD, we'll go there next. Similar comments, although you're not getting that nice kind of good-looking bullish divergence in the MACD, you're still seeing it kind of hover here near lows. It's in a strong downtrend. We haven't seen that strong bounce. We got a little bit of a 2-day bounce here last week, Friday into Monday, gave it back yesterday, trying to bounce a little today. So it's kind of all over the place, still very weak, doesn't have a lot of energy behind it. Maybe you still see more selling into the end of the year, I'm not sure, but the trend right now still is lower here in GLD. Again, longer term or intermediate term, very oversold on a lot of metrics, looking at weekly time frames and consecutive days to the downside. But once again, when it'll bounce, sort of nobody knows. Silver had a pretty encouraging day yesterday, Tuesday. Encouraging in the sense that it had that kind of big gap lower, and then it basically rallied all day, closed near the highs. It's usually a little bit of an indication that we have some short-term selling exhaustion down here when you get this kind of nice looking candle with that big strong gap down to start the day. So gave back a little bit more today. You'd want to see the bulk of Tuesday's candle hold in there if we are going to continue to see a bounce, and you get this kind of gap here now, at least in the ETF for SLV. Let's go to oil next. USO down 1.5% today, and that's right after yesterday. I published a post here saying, hey, oil looks pretty good. It's staying very resilient near highs, and then of course today it fell down by 1.5%. I do still believe it. It is still holding up pretty well, all things considered. One thing to keep in mind as well for you guys that are always looking at USO ETF. Remember, this loses a lot of precision here. If you're actually looking at the spot price of WTI futures contract, we are actually not kind of hovering underneath all of this resistance. We're actually above it, and actually I think there's no, I don't know if I can actually, this is a sort of a good indication of it here. I'm not sure what this TC2000 signal is, but it looks like it's giving us more or less what the futures contract looks like. But anyway, you can see that we are kind of hanging out above these prior highs here, and it's 53. I don't know if that is the exact correct price, but regardless, just keep that in mind when you're looking at USO, because again, it looks like we have this heavy kind of resistance overhead where it's again just trying to track the futures contract, and it's losing some precision there. So USO, I still like it overall. In general, it is cooling off today, but I think for the USO ETF price levels, as long as it's above this 11.10 level, which is the past couple of weeks lows here, I think that looks good, or at least the last week's low. UNG, very impressive day, up 8%. It's truly incredible here, creating yesterday being really this kind of washout day where we had this gap lowers down 3%, created this little island here again in the ETF, and then we had this sharp kind of snap back today. So strong trend throughout November into early December, a little bit of a pullback, and then you're seeing a sharp move higher again. You got to wonder if this is going to be a trend resumption and will very quickly be back at these prior highs here. I was very interested in it, just moved way too much today. Otherwise, I may have sort of jumped in a little bit of this position on the long side, but I'm going to just let that pass because 8% move, I'm not really interested in chasing that right now. So UNG, that's there, and I think that's it. So let's jump into some of the other sector analysis here. SMH, we'll go there first. Continues to hang out near highs. Very resilient sector, still just kind of grinding these boring sessions recently, but it still just hovers near these all-time highs here in the semis. So that looks good, continues to. XLF also looking good, moving sideways here. It's just one of the healthiest ways and most constructive ways markets can work off very overbought conditions, and that is moving sideways without a large pullback in price. So far so good in XLF. XLK also looking good. This is still an ETF, a sector that we hold a position in. We've talked about that, I've mentioned that, but this is still hanging up near highs here. It needs the energy to sort of punch through, this 49.25, 49.30 cluster of highs there. But I'm still involved. We're still involved in it. Smaller size trade for us, not a full position, but we're hanging in there with that trade. XLU, also wanted to point this one out as, remember, this one did break this kind of long-standing downtrend that it had been in for multiple months now, and it is kind of hanging out near highs. I guess it wouldn't surprise me to see this sort of roll over here as it's, kind of comes back into all of this previous supply in this general zone. So maybe we have more kind of trading back and forth to do between 46 and 49, but it's still, it's actually starting to shape up a little bit. MACD is positive, so this was kind of the forgotten leave it alone sector over the past few months, but it is starting to put some constructive behavior together, so keep an eye on that. On the downside today, XLV Healthcare rolled over a bit here, and this gets into the position that we're in. So we're actually short. If we go more specifically to the biotech, we're actually short. We're short via LABD, so this is the 3x Bear ETF, and we jumped into this position here on Monday. So we do have some gains in this trade already. We had an inside day. Let's go back to the IBB or even the XBI. Which is the equal weighted biotech sector. So we had this kind of we had this down day here on Monday. That was our signal to get in there. It's kind of a little bit of a kind of a failure here at these prior highs. A double top, MACD's down, so on and so forth. We had a little bit of a pop-up yesterday, an inside day. So we were very interested basically coming in today to see which way this inside day resolved. Was Monday just a fake out to the downside, and were we going to squeeze higher after this inside day, or were we in fact going to roll over? And today we saw we did in fact roll over. So we're resolving lower from that inside day, breaking below the prior 2 days lows, new lows on the week. We're at some support here. Looks a little bit vulnerable. I hope so anyway. We're in this position again on the short side for biotech, so that we're hanging on to that. And again, we're not aggressively shorting this market. We still have long exposure on. We're just sort of balanced out here and taking advantage of a weak sector. So IBB getting hit today. We're short it, looking for some more follow through. Also IYR today, also pretty weak, down 2.6%, and this one selling off back to last week's lows. So that is a little bit of a rundown there on the sector analysis. Let's take a look at a few individual names, and then we'll call it a day. Apple continues to grind higher. Look at all of these tails here on all of these candles recently. You can see just it's I guess it's it's a product of that being that time of year, but not a lot of convincing energy, not these strong closes, but it continues to grind higher, and that's oftentimes are the toughest trends to stay long, just given how it almost looks like it's going to kind of roll over and just kind of fall down every single day, but yet it keeps coming back and slugging it higher. So Apple continues to work. MACD at highs here, expanding. Life looks good for Apple bulls. You got the previous previous resistance here at 118.40. Google, I like Google. It is consolidating recently now. It had this nice strong leg throughout December here, early month of December, and now it's pulling back and it's flagging out here, very healthy in my opinion. I would look for this to sort of break back above 820, and I think if you can get back above 820, you can very quickly be challenging all-time highs in short order. So I like Google. I'm watching it. Still not ready to pull the trigger on anything yet, and in fact I might, just not in general given the time of the year, but could be interesting. Amazon, similar situation. I mean, I do like Amazon. It tried to, roll over here late last week below the 760 level, had this kind of interesting sell-off here, and it could have easily been a lot of trouble here for bulls, but it did save itself, came into the week with this push higher, continued higher yesterday, and it basically ended flat today. So it is holding where it needs to hold, and you get a clear line in the sand, might get a trade back up to the 790 level, but Amazon doing its thing, but it's a little bit messy in there. Tesla continues to work. This one, ever since breaking this downtrend line, it's just it's been moving higher. MACD, you can see making highs here. It had a little bit of a reversal today, but still over the past 2 weeks or so, it's had a nice move off of support. So Tesla looks pretty good. Finally, let's end with Twitter, which had a pretty interesting day, down 4.7%. Twitter looks in trouble here, particularly with this gap lower below reasonably significant support. So this $18 level, this has been $17.90, $18. This is where we found support late November, early December. There's some prior resistance here in throughout October. So, it's a pretty meaningful level, and to gap below that and really close on the lows is a bit concerning. The way I look at it is, it's still the skeptic in me could say this might be some type of trap, although, again, who knows? The way I would look at it is, if this doesn't quickly recover and start to move back into this gap and hold pretty much right here, then I would definitely be a little bit worried in Twitter. It could be a product, could be a nice January effect stock where everybody's kind of dumping this off for a tax loss right now, and it's going to be picked back up in January. That could be interesting, but in the short term, again, I think if you don't get a quick reversal here, be a little concerned there for Twitter. So that is the video for today. If you guys like these videos, remember, please do subscribe to the channel. Bottom right hand corner keeps you up to date with everything that we publish, and with that, thanks guys for watching, and I will talk to you soon.